Hey guys, well the OCR dropped this week from 4.75 to 4.25, 0.5% reduction in the OCR. That was expected. At the moment we're getting 1 year fixed rates around that 5.79 mark. I would expect to see us getting negotiated rates below 5.5% before Christmas, at least for that 1 year rate, and my recommendation at the moment would be to fix for a year. The next OCR change isn't until February, and so it's just not worth staying on a high floating rate for 3 months in anticipation of lower rates. At the longer end of the curve, earlier on I'd called that we might get a 3 year rate below 5% before Christmas. I was kind of hopeful for that. That's not going to happen, and the reason for that is that we've got Donald Trump as the next president in the US. He's viewed as inflationary, particularly because of his view on tariffs. He's trying to tariff anything that moves. That's going to increase prices for consumers in the US, which is inflation. And as a result, those longer term rates, which are heavily influenced by the US, are going to stay that much higher. So we're going to see short-term rates dropping. Long-term rates will drop, but not as fast as I would have liked, and so just don't expect that to go below 5% in a hurry. Coming closer to home, the Reserve Bank forecast has the OCR not reaching neutral until the middle of 2026. Which is still a way out. Of course, RBNZ's never accurate with its forecasts, so take it with a grain of salt, but it gives you a sense for where their head's at the moment. My view is that the OCR will get to neutral faster than that. I sort of see that as happening very much next year. What I think you can expect is that throughout next year you're going to get a 0.25% reduction in each of the OCR announcements. I think these big moves of 0.5% are done now. Now that we're at 4.25, I think you'll see just a gradual reduction through next year back to neutral, which is somewhere between 2.75 and 3%. At that level, you can expect to see mortgage rates between 4.5 and 5, and that's where you should be sort of centering your expectations. The days of 2 and 3% mortgage rates are long behind us, and long term, I think it would be sensible and reasonable to assume mortgage rates between 4.5 and 5%. If we look at the OCR announcement today and then translate that through to the housing market, the housing market is in a bit of an up and down phase. I think you'll get elements of confidence coming back into the market from the lower interest rates, but on the other side of that, unemployment's up, business confidence is improving but still at low levels. There's general level of economic malice out there, and the thing for consumers is that their balance sheets have been ruined. Consumers don't have much in the way of savings, so they're not going to be out there spending, and that's going to keep economic growth or the economic recovery fairly weak, I think, through 2025. That's probably a good summary of where we're at today.